We are still going on with the basket of currencies against the dollar. Now, in this episode, we are going to talk about buying the strong and selling the weak. If you look at the percentage, the euro has 56.6%, the JPY 13.6%, the pound has 11.9%, the Canadian dollar has 9.1%, the Swedish krona, which we are not going to talk about, has 4.2%, then the Swiss franc has 3.6%. Now, we have the European Central Bank raising its interest rates. Remember, we are not going to buy the euro before we see it manipulated first. We need to see the manipulation before we buy the euro. If the euro is to buy, we don't want to buy before the manipulation. If we are to sell the euro, we are not going to sell before the manipulation. Now, as a trader, you can buy the manipulation and sell the distribution. Or you can still sell the distribution and buy the manipulation, vice versa. Let's look at the strong against the weak. We're going to look at the euro against the Swiss franc or the CHF. Why are we doing this? It's a basket and we have high volatility expected on the euro. Once I see that, okay, we have high volatility news expected on the euro, we are going to be 1 hour ahead. We're going to be an hour ahead. You're going to enter the market an hour ahead. Let's come to the charts here. It's a 15-minute time frame that I'm using to analyze the market. And I want to break down for you everything here. So my first indicator on the Euro Swiss, we have a drop on the left-hand side. The Asian dealing range, rather. So we see a drop before midnight, the New York time. So what does this one indicate? To me, I will take this trade. That's why you have to be in the market ahead of time. We see a drop. This is before midnight. You're not selling here or you're not buying here. Those that trade the yen session, simanyi higher highs and higher lows, simanyi equal highs and lows, retail concepts. Let's break down this setup here. 101C tulaba, we have an old low. To me, it's an old low because it is before midnight. Retail price comes back to this low. They buy here. Price comes back. It comes to this level, makes a high. Tries again, another high. Relative equal highs. This is before midnight, the New York time. But as a smart trader, you're only waiting for the magic to happen before. You're only waiting for the magic. You're only waiting for entries after midnight. This is midnight. This green candle comes in at midnight. Price drops again to this low. It doesn't take the old low. These are the bank, the central bank. What are they showing retailers? They are showing retailers that this is a support level. If you see 1, 2, 3, it is indeed a support level. As a smart trader, what do you see above you? We have relative equal highs here. We have high one and the second high. Price drops. Your entry must be between this, the 80 level and the 70 level. Why am I not taking 70 level for entry? I will explain to you. Let's go to a lower time frame. After 15 minutes, we are jumping to a 5-minute time frame. So this is a 5-minute time frame. Relative equal highs right here. What am I going to do? I am not entering the market on this level, on the 70 level. Smart money has something above these highs. Above these highs, there is liquidity, relative equal highs. If we have liquidity here, how am I going to enter the market? Smart money will sell above these highs. But again, we have a smart trading entry below these highs. I am going to do this. I am going to sell above these highs, but not on the 80 level. I'm going to look for 70 and a half to sell. Why 70 and a half? Because 70 level is below these highs here. You see the relative equal highs? They are relatively equal, but again, smart money will have to sell above these highs. If smart money is to sell above these highs, which level am I taking? I am taking 70 and a half. If it's not coming to 80, I am taking 70 and a half, which is right here, 75. 75. Leave the pipette alone. I'm just looking at 75. 98, 75. 98, 75. That is my entry. Let's go to a lower time frame for more analysis. Relative equal highs after midnight. Remember, we said you already have your plan that this is 70 and a half. Let's just have 70 and a half. You mark that level. After marking that level, remember we are entering the market an hour before the news release. Before the news is released, an hour before. This candle comes in at a quarter to 3 o'clock in the morning. Or let me say 2:30, 2:45 rather. I am selling here 1 hour before the news is released. If you're sure that you're going short, you're going to sell here. Price level 70 and a half. Why 70 and a half? I repeat, it is because we have relative equal highs above the smart trading entry. And if price is not coming to the institutional level here, I am going to use a half. I'm going to use 70 and a half. We can also use 40 and a half if at all this was a 50 level and this is 40. We have relative equal highs. My entry will be at 40 and a half. Am I selling there? Yes, I'm going to sell there. 1 hour ahead of the market. I sell there, price drops, consolidates up. Retailers are seeing a higher high and higher lows. Higher highs and higher lows. Retail traders are buying, but for you, you're going to sell above these relative equal highs. If price doesn't rally to the 80 level, you are going to find yourself selling here. 70 and a half. Well, few pipettes, it goes against you, few pipettes, then drops, come back here, you're scared, rallies again, then finally, this candle here pushes price lower. A quarter past 3 o'clock in the morning. So this is the Euro CHF. Now, after trading below these lows, it gives you another entry at 3:30 o'clock in the morning, the news release. If you don't understand this well, you are going to go back to the previous episode. The very first episode on that started, this series. So if you missed this, if you didn't trust this, remember, if I am trading imbalance, I am not going to trade imbalance on any other time frame. I will trade imbalance on the lowest time frame, which is a 1 minute time frame. If I missed this, I'll wait for price to come back in this area of imbalance right here. I'm not using 15 minutes, I am using 1 minute time frame. I will sell as soon as price trades above this candle, which is the next candle. I sell here. After selling here, this is a smart entry for you. Or most people will call this a sniper entry. You sell there, price drops. This is a manipulation on what? It is a manipulation on the euro. Because remember, the interest rates are higher. So before the euro buys, it will have to first sell. So if you to participate in that, well and good. That is your perfect entry. Let's look at the other currency, the second currency after the Swiss. Let's look at the Canadian dollar with 9.1%. So this is the euro card. We're going to mark midnight. The New York time. We're going to mark midnight. So let's have midnight. Now, if you already know that the euro will sell against the Canadian dollar, this is what we have. This is exactly what we have here. So do you remember around here we have an institutional level, which is the 50. We have a 50 level up there. We also have a smart trading entry here, which is the 40 level. The 40 level right there. So how are you finding your entries? It's very simple. We have this move down. What time are we looking for entries? We are looking for entries 1 hour before the market sell. So let me mark this area. I love doing this sometimes. We have the news coming in at 3 o'clock in the morning. Sorry, 3:30 o'clock in the morning. But again, just like the Euro CHF, let's go to a 5 minutes time frame, from 15 to 5 minutes. So on the Euro card, this is the 5 minutes time frame. This is the 5 minutes time frame. After midnight, what do we have here? You see these highs here? You see this area? Let me mark for you this area. Let's mark this area. We have liquidity here, sell side liquidity, just this area. What is this to you? Now, we have liquidity up here. To you, what does this indicate? This indicates retail resistance. This indicates retail resistance. Again, history repeats itself. History repeats itself. We have that retail money above the smart trading entry, which is the 40 level. Where are we getting our entries? We're going to look for 40.5, just like the previous example. We looked at 70.5 smart trading entries. All these are my concepts. All these are my concepts, and I'm introducing new concepts related to central bank, price delivery, central bank this and that, central bank, all that are my things on this YouTube channel. We're going to look for 40.5. I will look for 40.5 right there. Why am I looking for 40.5? It is because these highs are above my smart trading entry. And if price is not coming back to the institutional level, which is a 50 level, I don't care about supply and demand. I don't care about order blocks. I don't care about all that crap. All I'm going to trust is a smart trading entry, 40.5, or a smart trading entry and a half, then the institutional level. I'm looking at 3 levels. I'm looking at entries between 3 levels. Let's jump to a 1-minute time frame. I will enter the market as soon as price hits my entry. Well, we said you're only entering the market 1 hour ahead. But what if price doesn't come to my entry? Plan your trade and trade your plan. The price comes to my smart trading entry and a half. I am selling there. The very first candle, at what time? At exactly 3 o'clock in the morning, the New York time. Which currency? The Euro card. The strength, the basket, if you look at this one here, it is 9.1%. It's 9.1%. I'm looking for strength. So every time the central banks are looking at price manipulation, this and that, that is what they consider. A 1-minute time frame, we sell here at that particular time. As long as price comes to that level, I am entering the market. I am entering the market ngasina gwenebuzi zako. There, it drops, comes back again, then boom. What do we have? It sells here. Now, if it left you, it gave you another opportunity, but it's too late for you. It is too late for you. So I hope you've understood. Let's wait for the other episode after this one. We start from there.